Hey traders, welcome back to this week's weekly Forex forecast. Last week was a bit of a slow week, but it started quickly. And right out of the gates, we got a bunch of opportunities in the US dollar pairs. And the US dollar theme was actually where we made all of our money last week in the GMT members area. And in fact, we're now 16 weeks green out of the last 17 weeks. So we kept the streak going last week. But after the US dollar pairs started to give opportunities throughout the week, it started to slow down. And I'm talking about the markets, Forex markets overall. Why is that? Well, I'll tell you in a minute why I think that could be. But euro dollar very quickly, because we start every single week with euro dollar. This was actually a pair that tested its weekly upper bound and reversed last week. So we broke back inside the channel, tested the weekly upper bound up in this area. We got this kind of double top, and then we reversed back down to the bottom of the channel. So coming into this week, euro dollar looks like a pretty obvious setup. Intra-week breakout, pull back, and a move up into the profit taking zone. However, there is one problem. Coming up this week, we've got 3 interest rate decisions. We also have US GDP coming out next week, and we've got non-farm payrolls on Friday. So the issue with that is we've got a bunch of events next week in the calendar which can, move markets in either direction. And on Friday with non-farm payrolls, very often you can see markets, even with the other interest rate decision and everything else, and I've seen this before, even with a Fed interest rate decision, you can actually see not much happen, and then on non-farm payrolls, the markets start to move late on in the week. So there's a ton of things coming up next week, and in today's video, I'm going to show you how I'm going to be trading around and planning for and through those events next week in the pairs that we're going to look at. So that would what I'd be looking at intra-week with euro dollar. The only problem is those 3 interest rate decisions, which kicks off with Canada on Wednesday. Then after that, we have the Federal Reserve. And then after that, we also have the BOJ. And then, of course, on Friday, we've got non-farm payrolls. So what I would say is, this intra-week trade, it could be there. But the problem is with non-farm payrolls week especially, and especially Monday into Wednesday with the Federal Reserve meeting on Wednesday, euro dollar is probably going to do nothing. So the time, if you were to get involved with something like this, I would be looking primarily after Wednesday's Fed decision. Because if you get the Fed decision and you see weakness in the US dollar, so the event itself is bearish for the dollar, that's when you could get the breakout. And before then, money kind of sitting on the sidelines, you could just see this kind of chopping around into the side of the channel here. So just be a little bit careful if you are trading this, jumping in early, because it could just be very choppy before the Federal Reserve. But after the Federal Reserve, you can look for that weakening of the US dollar and that first breakout, pullback, and then bull flag into the profit taking target. The kind of setup we look at, every single week, intra-week. The other thing I'll be looking at here, and when we go through a portfolio selection in today's video, you'll see the euro pairs and the dollar pairs. None of these are actually high up on my list. I think there are much better pairs to be looking to trade going into next week, and those other pairs are the top of my watch list. So we will look at those in today's video, but the second thing I'll look at is this. So if on the interest rate decision, so after Wednesday, which is when I'm going to be primarily looking at this myself, if we get the opposite, so what we're doing here is we're being reactive. We're not trying to predict the outcome of an event because, we can't predict the future. We don't know what the Federal Reserve are going to do or say. So what we can do is we can set it up both ways to be reactive. If we get that weakness, you can look for the breakout and the bull flag. If you get US dollar strength, then what we'd be looking at, the sell-off into the buy zone. So between these 2 levels, people who follow this video every single week will know that this is the area that euro dollar becomes oversold during the week. And then these areas update every single weekend. So below the 1.16198, we turn oversold. And if we sell off into the buy zone and we take out this low, this is where I'll be looking after the Federal Reserve decision to potentially buy euro dollar. So we trade into the buy zone, we're oversold during the week, and then we run into support. I'll be looking for sellers to short into this, and this is where I'm going to be looking for them to get trapped right here at this low. So if we get, and primarily this is what I'll be looking for, I'll be looking to buy this dip, on any strengthening of the dollar. But if you are looking at trading intra-week, you can look for the weakness, you can look for the breakout, again, after the Fed decision on Wednesday. So that's what I see for euro dollar. I'm only really going to be looking at euro dollar from Wednesday onwards after the Federal Reserve decision. I do think there are better markets to be trading next week, and we're going to look at those right now. Okay, so moving on to the portfolio selection, you can see the Swiss franc is still the #1 long theme. So that means every time the Swiss franc is dipping down, I'm looking to buy the Swiss franc from, below or above the upper bound, depending on how the pair is structured. The Canadian dollar is the second currency to the long side that I'm interested in going into this week. Now, we do have that BOC meeting, so there's two ways I'm going to be looking to play the Canadian dollar pairs. If we can get the setups early, I want to be in and out before the Bank of Canada on Wednesday. If not, then I'm going to show you how I'm going to be looking to trade the Canadian dollar pairs after the Bank of Canada rate decision comes out on Wednesday. So CAD pairs are at the top of my list next week, and also the Aussie pairs. Now, the US dollar and the euro have dropped out. We do have the Federal Reserve, we do have non-farm payrolls, and we do have also GDP next week. So the dollar pairs could actually be quite volatile. There's a lot going on next week. So the fact that they're not, at the top of my watch list quantitatively speaking, that's actually a good thing. Let, the news events come out, and then we can take a look at, the dollar pairs probably, next week. So, 5 trading days, what's 5 trading days really in a year? Nothing. So I'd rather just leave the dollar pairs, generally speaking, for the next kind of 5 days and come back and revisit them next week. Now, if you get, a strong dollar or a bearish dollar from the interest rate decision itself, just as we looked at, in euro dollar, you could also look at that in the other dollar pairs as well, if you have access to hedge dash. If not, US dollar pairs, probably just best left till next week. So on the short side, I still like the Japanese yen as the #1 short theme, followed by the New Zealand dollar, followed by the pound. So it's pretty clear, the structure quantitatively of what I want to be looking at next week. We're going to be looking at franc yen once again to the upside. Fantastic long opportunity over the last however many weeks, 3, 4, 5, 6 weeks, even more. And once again, if we can take out that lower bound, I'm going to be looking at buying the dip in franc yen. So franc yen to the upside, New Zealand franc to the downside, and pound franc to the downside. We're also going to be looking in today's video at CAD yen to the upside, New Zealand CAD to the downside, pound CAD to the downside. And we're also going to be looking at pound Aussie to the downside, Aussie New Zealand to the upside, and we're going to look at Aussie yen to the upside as well. Okay, so kicking off the watch list as we always do with crude oil. Now, crude oil actually has a bit more structure to it now. If you remember, we had the run up with the Iran-Israel conflict, and then we had the dump after we had the ceasefire. So after that, we kind of started to lack volatility, and I kind of said to you guys, the price action has been kind of distorted. We didn't have any significant resistance areas up here as well. So you get these kind of, a little bit like air pockets. You start to break up, you can actually travel through these quite quickly. So I was looking at this, and it's been kind of off my radar really since this kind of big sell-off. However, coming into this week, notice how we now have a really significant daily high. We're looking in the 4 hours, but this is a significant daily resistance area at the 69.65. And this is sitting right in the sell zone. So overall, I am still looking on balance to be short crude oil, given the opportunity. So what I want to see next week is I want to see crude oil pushing up, pushing into the sell zone, which is where we turn overbought during the week or intra-week. And if we can get buyers pushing it up to this key area of resistance, this is where I'm going to be looking for a failure. This is where I'm going to be looking for buyers to get trapped. And as they pull their positions, that's where you get the liquidation back inside the range. So that's the setup I'm going to be looking at in crude oil next week. If we end up above the 72.51, this is where we turn extremely overbought during the week. It is the second place I can pull the trigger on a short, or if I'm not already involved down here, this is a great first position. But as always, these gold levels are more backup levels, not really expected to be taken out. In fact, the vast majority of the time, these gold levels will not be hit. So they're kind of backup levels, good to just keep on your chart. But generally speaking, the blue levels here, these are what the markets are going to trade around most of the time. Okay, so kicking off the Forex universe with franc yen. This has been pretty much one of the top markets, if not the top market that we've been looking at for a while. And it has just been motoring to the upside. Last week I was looking for a dip. It came very close to its lower bound, started to reverse just beforehand. Coming into this week, there are two significant lows that I'm interested in. Down here at the 183.87, which sits just above the buy zone, and the same low that I was looking at in last week's video, the 183.36, which is in the buy zone. So what I'm going to be looking for next week is I want to see this come down, and I want to see traders attempting to push this through these lows. Now, think about this, you know, if a market is very, very strong, you almost want to look at what you don't want to be doing and take the other side of that trade. So essentially, we're looking at where traders are likely making a mistake. If you have a market this strong and traders start to attempt a breakdown below prior lows, this is most likely going to fail because this market is a very, very strong market. So what that means is if we start to see traders, and we could say start to see traders making a mistake. Now, they're not going to make a mistake all the time, but it may be the case that, you know, 75% of the time this kind of breakout fails, right? And 25% of the time it works. Well, in trading terms, that's a mistake because if you do that 100 times, you're going to end up losing money, right? So a mistake in trading is simply taking a trade which doesn't have long-term odds in your favor. Now, obviously, there's other mistakes, you know, you can make. You know, you can fat finger things, you can attempt to click one thing, maybe you put too many lots in, this kind of stuff. But just purely in terms of sticking to a process or making a mistake, you know, you can define making a mistake as taking a trade that doesn't have long-term edge. So if there are traders attempting to break this through the lows, and we know this is something that doesn't have long-term edge, we can take the other side of that. Now, I've got these two highlighted here because this is the first one I'm going to be looking at. If we go straight through here, you know, if I drop down to the lower time frames and see on the 5 minutes or the 15 minutes that we're going straight through this level like this, then, you know, as this kind of pulls back and consolidates, I'll be looking at this one. Makes sense? But the first one I'm going to look for is this. So I want to see the price come down, attempt to break through this low, trade into the buy zone. So this market turns oversold during the week below the 183.82. And this is where I'm going to be looking, essentially the bottom of this consolidation, for sellers to get trapped. And I'm going to be looking for that liquidation back inside the range. And this, usually I'm looking to capture 1 or 2 days worth of liquidation. That's what I'm looking at. And that's exactly the setup we look at with GMT members in real time throughout the week. So that's what I'm going to be looking for. The 180, 187 is where we turn extremely oversold. Don't anticipate it coming down here. If we do trade below the 180, 187, something significant has happened, probably a trend change, but it is the second place. I could look for a potential buying opportunity and a 1 or 2 day liquidation. This market is so strong that intra-week trading in this market, you know, has been a fantastic opportunity over the last however many weeks. So once again, you can see we're already starting to break above the moving average. So look for it to follow. You can look for it to hug the moving average. You kind of got this counter trend breakout already. And then you can look for that bull flag setup for those of you who trade Fibonacci into the 187.71. But this turning oversold during the week is the primary setup that I would like to see next week. Next is New Zealand franc. I can either be short this market next week or do nothing. Buying this market is not an option for me. You can see we've already broken above the moving average, which we've been below all the way down. And now we're kind of retesting it. So this is where we could very easily get that bounce into the weekly upper bound. So if we start to push back, what I want to see is I want to see it turn overbought during the week. So a market I'm looking to be short, be short, be short every time it pops up. And I want to see it trade into the 0.4858, this high over here. There's actually one just above it as well. But if we start to see buyers attempting next week to push through the 0.4851, this is where I'm going to be looking for buyers to get trapped, to pull their positions, because unless we get some kind of unexpected catalyst, which is a catalyst that comes out, which is outside of the economic calendar, so we're not expecting it, you know, somebody says something or there's a press release or something, then there's no reason for this to really break out to the upside, because this market is quantitatively weak. And usually you need a catalyst in order to change trends. You know, if you have a trend like this, usually, you know, if this starts to turn overbought, it's usually going to fail, because unless you've got a catalyst to really change this trend, this will just keep lumbering to the downside until a catalyst comes out. So that's what I'm going to be looking for in real time with GMT members next week, if we can trade above the 0.4858. If we start to push back and we're looking at this, you break back down below the moving average, Then, you know, you can look for that bear flag set up into the prior low. So the prior low sits right in the buy zone, which in this case is a profit taking zone, right? Because I can only be short or do nothing. I can't outright buy this, but if I shorted it somewhere here and it sells off into this zone, then I can buy it back and book my profit, right? But I can't buy it and open a long position. So those are the two things you can look for next week. And as always, the 0.4895 is where we turn extremely overbought. It is the second place. I can pull the trigger on a short if I want, but it's not expected to be taken out. And the final franc pair is pound franc. Now, this is a market I've been looking to be short, and again this week, it's a short or do nothing for me. I cannot buy this market. It's actually trending down in a really well-defined channel. Every time we test this low, you can see we bounce. So the profit taking target would be, you know, conservatively down at the channel low. If we pierce through the channel, then you could look at the 1.0581. That's where we turn oversold during the week. So great place to book profits if you're short intra-week. However, what I would like to see is this. Now we've already broken down below the moving average. So, you know, we could very well, because we've got this momentum, you could see that Fibonacci trade play out pretty much straight away. So that would be, if you were looking at intra-week stuff, that would be the leg down I'd be looking for. But if that fails, and you know, sometimes these intra-week kind of setups fail, if that fails and we start to see pound franc pulling all the way back, look how nice the confluence area is. We have the weekly upper bound at the 1.07716. We have this prior high, which we've already failed from once. And we have the top of the descending channel sitting right here, intersects that prior high right in the sell zone. So we saw this set up very recently with US dollar franc. Do you remember? We had the weekly upper bound, we had a prior horizontal level and that descending channel line, and they provided a 3-point area of confluence. And I said to you guys, if we pull back in US dollar franc, that's where I'm going to be looking to short. We traded right into it, and we had a big sell-off, and that was also catalyzed by some news, I can't remember. And we traded that in real time with members. That was actually a really nice trade. So this, you know, I'm looking back on that because this has exactly the same properties. So if we can pierce this area, which is pretty much the 1.07783, this would be a fantastic place to look for a short for at least 1 or 2 days. And then I wouldn't be surprised, you know, we pull back like this and make the next leg down over the next week or so. But this is primarily the spot I'm going to be looking for a short from. If you trade the intra-week stuff, you know, you might actually get that go intra-week. Pound franc, you know, could probably go before the Federal Reserve as well. So I really like pound franc to the downside next week. I can only be short or do nothing. Cannot buy this market under any circumstances. Okay, so moving on to the CAD pairs, starting with CAD yen. Now I've zoomed out a little bit here so you can see this is also channeling quite nicely. These two prior lows down here, then we take this and attach it to the first high, and that projects out the top side of the channel. But what's interesting next week is you can see CAD yen has just kind of been moving sideways. Again, not unexpected because we have the Canadian interest rate decision next week. And I wouldn't be surprised to see this just do this into Wednesday as well. However, there's a couple of things I'm going to be looking at. So firstly, just as normal, I'm going to be looking for CAD yen to pull back to breach the 106.35, which takes us into the buy zone. So we turn oversold during the week and we trade right into the bottom of the ascending channel. That's going to be the place next week. I'm going to be looking for sellers to, you know, attempt to break down. Usually with these channels, it kind of attempts to break through and then it fails. That's the 1 or 2 day liquidation I'm going to be looking forward to the upside. If we get, and this is where we start to get into a post BOC interest rate decision setup. So this is where I'm going to be looking at between Monday and Wednesday. If we get this kind of sell-off early in the week, I'm going to be looking to be in and out before Wednesday. But let's say nothing happens, and I'm going to be trading all the CAD pairs the same way next week. Let's say nothing happens into Wednesday and the Canadian dollar versus the yen continues to move sideways, okay? Then if we get a neutral outcome from the event itself, so in other words, it's a bit of a non-event. Maybe they hold rates, I think as expected, I think they're expected to hold rates. They hold rates, they give a kind of, you know, mealy mouthed response in the press conference. There's no real surprises either way. Well, in that kind of neutral event, it's almost like the event hasn't happened at all. So I would still be looking then for that pullback into the first lower bound for the 1 or 2 day reversal, just as if there were no interest rate decision at all. If we get CAD weakness from the Bank of Canada. They come out unexpectedly, slash rates, you know, say they're going to slash rates even faster than projected before, etc., something like this. Then in a bearish or a short CAD situation, you know, I will assess it. If it's really bearish, then I may, and this just starts flying straight down, I may just sidestep this first level. And you know, that does take a little bit of nuance. It takes a little bit of experience, because you know, determining whether something is significantly bearish or just a bit bearish, you know, does take a little bit more experience. But let's say it's super bearish and it's plain to everybody that it's really bearish. And as we start to come down to this level, we just go straight through here like a hot knife through butter. Because what I'm usually looking for is, if we test this level, I'm dropping down to lower time frames and I'm looking for those reversal patterns. And that's where I'm getting involved. So if I drop down to the lower time frames and we have a negative outcome for the CAD and it just does this straight through the first level, then I'm just sitting on the sidelines. I'm just waiting. And it pulls back, you know, maybe we have a bear flag. So then I'm waiting for the next leg down. Now the next leg down hits the second lower bound, right? Because if we've got an interest rate decision, you can see these second gold levels tested, because you're going to get much more volatility. So if we come down and we test this gold level, and then at the gold level we start to double bottom, then I'm looking for that 1 or 2 day reversal from down here. Make sense? So those are the two things, you know, if it's neutral or if it's a very bearish outcome for the CAD, that I'll be looking at. And of course, if it's a bullish outcome for the CAD, then what's most likely going to happen is it's going to move sideways. Then you're going to get the breakout, and then usually you get one pullback in the 4 hours and a follow through, and that would be the opportunity for the follow through trade after the Bank of Canada, if you get a long or bullish outcome for the CAD. So those are the three setups that I would be outlining to look for post Bank of Canada. And again, I'd be looking at all of the CAD pairs in exactly the same way. Next is New Zealand CAD. Now look at New Zealand CAD, because New Zealand CAD is clearly in a well-defined range, right? Here's the previous high where we tested it and we sold off. And this is the low. So it's between the first high here and this first low that we've attempted to break out, we failed. We've attempted to break out, we failed. We attempted to break out and we failed. Now coming into this week, I can only be short or do nothing. Buying this market is not an option for me. So again, if we have a neutral outcome, or if this happens before Wednesday, what I would like to see primarily is a test of the range high at the 0.83177, an attempt to break through the range high, and that's where we enter also the sell zone next week. And I'm going to be looking for this right here. I'm going to be looking for another liquidate, and look at this. Look at the way this just liquidates. Because these buyers running out of steam, they attempt to break out and they get trapped. They pull their positions. Look at this liquidation to the downside. Only down here, almost at the bottom of the range, do we actually start to catch a bit of a bid for a corrective move. So that's what I'm going to be looking for, 1 or 2 day liquidation back inside the range next week. If we get a bearish outcome for the Canadian dollar, then this is when we could see this blast through and take out the 0.83951. So that would be the place on a very significantly bearish catalyst for the CAD that I would be looking for a potential opportunity. You know, if it's a little bit bearish, then I would default to this level here. So I would start to look, you know, maybe, you know, they hold rates, or it's not super bearish, but they have a bit of bearish rhetoric, and that helps push this up. But we think, you know, it's not super bearish. There's no reason we should see this explode through. And then we sit and watch, and we see on the 5 minutes or on the lower time frames, you know, price is doing this, and then I would be looking for this short down here. So only if we blast through here, that would be the second place I'd be looking for a short. And of course, if we get the CAD bullish outcome, so again, you can do this reactively. These are really the three outcomes, pretty much really the only three outcomes you can get from the interest rate decision. So you get a bullish outcome, and what happens, the New Zealand tanks versus the CAD, we're back down below the moving average, and you get that bear flag sell off into the lower bound. And also you could look at the bottom of the range, which is this low over here, the 0.8152 for an intraweek profit taking target in New Zealand CAD. But whatever happens on the Bank of Canada, I can only short this market, or of course do nothing. But buying is not an option for me next week. And the final CAD pair before we move on to the Aussie pairs is pound CAD. Again, I can either be short or do nothing. This market is consolidating sideways, and again, it could just do this into Wednesday. But if we get the pullback before Wednesday and we breach the 1.8556 and we start to take out these highs, this is a daily high and this is the first 4-hour high. So these are the two I'd be looking at. But if we push into here, and again, you might say, well, how do you know whether to trade this one or this one? Because I'll be looking on lower time frames. If it blasts straight through like this, then I'll be looking for momentum to fade at this one. If it hits this and starts to fade on lower time frames, that's when I'd be looking to trade that one instead. So not just jumping in as soon as it touches it, I'm looking for momentum to fade most of the time. Sometimes I'll take it, right on the key area of resistance or on the support, but usually I'll look for that momentum start to fade. So if we test this is what I'm going to be looking for next week. I'm going to be looking for buys to get trapped before the Bank of Canada, and I'd be looking for that liquidation. And if there's a neutral outcome, then I'll also be looking for this setup. If we have a bearish Canadian dollar outcome and it's significantly bearish, I would be looking, and it blasts all the way through both of these, then I would be looking above the 1.8702, because even on a bearish catalyst, most of the time you will still reverse at the gold level in these kind of situations. So that would be the second place above the 1.8702 that I would be looking at, but this is my preference. So only if we get a very, very bearish catalyst will I look at this. And the third and final thing is we just chop sideways into the event itself, and then we get a bullish outcome from the Canadian dollar. The moving average tracks it down, and this just ends up being a big kind of channel breakout like this. Then you get the pullback, and that would be your bear flag opportunity into the profit taking zone next week at the 1.8262. Okay, so wrapping up the Forex universe with the Aussie pairs before we move on to gold and silver. There's two key points in Aussie yen that I really like. This prior high, which we broke through and we've already stair-stepped, and the low, which we actually stair-stepped the prior high itself. So this level right here next week is exactly where I am going to be looking for sellers to make a mistake. I'm going to be looking for sellers to attempt to breach this to the downside. I'll be looking at this essentially as a kind of ABC. And this is where I'm going to be looking for a false breakout to the downside. I'm going to be looking for sellers to get trapped. I'm going to be looking for that liquidation back inside the range for 1 or 2 days. The second thing is we've already broken up above the moving average. So unless we trade back down below it and we attempt to break down below the low, if we start to just, we're not going to get that opportunity if this doesn't happen. But if we start to instead just hug the moving average, you can look for this to potentially go intra-week. If that kind of intra-week Fibonacci trading is your thing. The profit taking target is the 98.22. And the other level to keep an eye on is the 94.43. I don't expect this to get taken out. If it does get taken out, this is likely a major trend change. To do that, you need some kind of a catalyst usually. So it's unlikely to happen. But if we do trade below the 94.43, I can pull the trigger on a long position here as well, because the odds of a snapback increase greatly once we trade outside these gold levels. But it rarely happens. Next is Aussie New Zealand. Aussie New Zealand is a buy or do nothing for me. Selling this market is not an option. So what I'd like to see this market come down next week. We're already below the moving average, and stair step the prior high over here where we started to break out. So once we trade down below the 1.08423, this is where we enter the buy zone. And I'm going to be looking, especially as we don't really have any significant lows, close to price, I'm going to be looking for it to form its own lows. So I'm going to be looking for the 4-hour chart to start to double bottom itself. And that's where I'm going to be looking for a 1 or 2 day liquidation to the upside next week, right there. The second thing is, because we're already below the moving average, you might get a fast market. So it pulls back, doesn't quite take out its lower bound, and you get the re-break. That's when the moving average follows it. See it test it twice here, and then it starts to go. So you can look for that pullback into the moving average and look for that bull flag rally. In this case, I would look for the prior high, because we're trending to the upside, and usually what do you expect in a trend? You expect higher lows, and in an uptrend at least, higher highs. So the prior high would be a good profit taking target inside the sell zone. And the third and final thing, of course, I don't expect this to happen, but if we end up below the 1.07753, significant trend change, but also it is an area I could pull the trigger for a long position as well, but I just don't expect that to happen. So this, the 1.08423, this is the primary setup I'm going to be looking at next week in real time with GMT members. And last but not least is Pound Aussie. Now I can either be short or do nothing. I cannot buy this market next week. So if we do get strength, reactively, I'm going to be looking at that essentially as a mispricing. I'm going to be saying, in the grand scheme of things, this strength doesn't make too much sense and is probably going to fade and peter out and roll over at some point in the near future. So where could that happen? Well, a very good place to time any potential reversal of strength would be above the 2.0722. So making the statement that buyers attempting this breakout are taking poor decisions or making a trade which over time is not going to get them paid, because you're attempting a breakout in a market which is already overbought, right? Very, very difficult. It's going to fail most of the time. So in that sense, we can capitalize on that mistake and we can look to take the other side. We can be their liquidity. We can say, look, if you want to make that bet, we don't think that's a very good bet. We will provide you the liquidity. So if it fails, you know, we will end up getting paid. So that's what I'm going to be looking for primarily next week. We're already below the moving average, so you can look for it to kind of hug the moving average. You know, if it doesn't break back above it, you can look for it to hug into it and then start the next leg down. Or third and final thing, which again, I'm not anticipating to happen, but it's always worth having these levels on your chart. The 2.0835 is where we turn extremely overbought, and it is the second place I can pull the trigger on a short if we were to get there for whatever reason. Okay, so wrapping up the video with gold and silver. Now, last week I highlighted this range in gold, and I said instead of trying to predict gold, I would reactively be looking to trade it, whether we traded above the upper bound into the top of the range or below the lower bound into the bottom of the range. And actually, the weekly upper and lower bounds pretty much in exactly the same place last week as they are this week. So we tested above the weekly upper bound into this high, and look at this liquidation, this failed breakout. An amazing sell-off. This was a really, really, really good opportunity last week. It was a fantastic opportunity. Did I get involved with it? I did not. Why? Because unfortunately for me, it went in the overnight session. So it went when I was asleep. The breakout, the attempted breakout actually took place during the overnight session for me. So unfortunately, I was unable to take advantage of this. However, this is exactly the setup that I'm looking to capture every single week. Every single week, you know, in every single market that we're looking at, you're not going to get these reversals in every market, but we look at a plethora of markets and we sit and wait to see which ones do attempt breakouts in these areas. And when they fail, you know, this is the kind of liquidation. This is the payoff you can get. So really nice setup from last week, and it's very, very simple. Going to be looking for exactly the same thing again. If gold pushes up into the top of the range and takes out these prior highs here, I will be looking for another false breakout and a liquidation back inside the range. If gold comes all the way down, breaches the 328344 and takes out these lows, then I will be looking for exactly the same, but in the opposite direction. I'll be looking for that false breakout and a liquidation for 1 or 2 days back inside the range. I'm wrapping up the video with silver. Now, silver's a bit different because I'm not interested in shorting silver at all. I only want to be a buyer of silver. So what I want to see next week, we're already below the moving average. So I'm going to be looking for silver to come down, take out the lower bound at the 36.32 and trade into these lows down here. If we attempt to break through these lows next week in silver, this is where I'm going to be looking for sellers to get trapped and think of that liquidation in gold on the failed breakout. That's exactly what I'm going to be looking for, but to the upside next week in silver. If we get a fast market whereby the moving average follows it down, and instead of taking out the lower bound, you get the re-break, you can look for the trend continuation, that kind of bull flag setup, into the profit taking zone next week at 39.99. And if we end up down below the 34.49, don't expect it to happen next week. Very, very, very unlikely it happens unless we get some kind of unexpected catalyst. I don't expect this to happen at all. But keep the 34.49 on your chart nonetheless, because if we do get there, you know we are extremely oversold in silver next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.